Kick off. Thank you for joining us. This is a presentation on our half-year results. It really is a follow-up on information that we presented some weeks ago when we did our capital raise most recently. So in a lot of ways, you've seen a lot of these numbers, but this is a good chance to confirm them and also to take questions about, particularly about the outlook that some of you might have. So Neil, can we start off at that page there? I just really want to highlight, you've seen this slide many times before. The point for us, we're 60 years old or new this year. We've been doing this for a long time. We're very experienced in this, and the integration of the network is really critical. And this season in particular, we've seen the benefits of integration. Different times of the years, you might make more money, more margin from different parts of those businesses, but it's really critical. The integration and the efficiencies that we've got from integrating these businesses in this year in particular has really been a positive for us. Next slide, Neil. In summary, I'm going to touch on some of these points in a little bit more detail, but in summary, we're really pleased with the result. EBITDA of $20.9 million, NPAT of 12.4. You can see there. It's been a difficult season in various operationally. It's been very challenging. If anything, inflation has been a challenge, and it has impacted on our ginning business. Margins are down in our ginning business, but they've been offset by very strong co-product. Cottonseed pricing has been strong. Our ability to execute and get things to market has been extremely good, and we've been able to, our earnings from our joint ventures is compensated for the decreases in other areas. So on balance, we've achieved it in a different way, but this $20.9 million is an excellent result. The other thing that I'm going to touch on is that there's been a delay. Some of the earnings have been pushed into the second half with weather. So I'll touch on that in a little bit more as we go through. Next slides, Neil. Just to kick off here, our business is very much built on the great people in the community and the teamwork that we have. It's very much, and again, I come back to that integration piece. It's really critical that the left hand talks with the right hand, and it's absolutely critical that we work together. And safety in particular has taken a big focus for us. And even we've seen a reduction in the LTIFR results, but we're well beyond that, looking at total incidents and the impact it has on our business in terms of reducing any shift that's impacted. The next slide, the picture tells 1,000 words. I'm not actually sure. This picture here may actually be a few months old, but I've seen one from yesterday that's almost exactly identical to this one. This is our site in Weewaw. It's protected by a levee bank, so that water completely surrounds the town, and they're all our facilities that you can see right in the front there. We can't get in, we can't get out, and so it does impact our operations. We have trains that are unable to get in there and pack. So, as I said, this picture tells 1,000 words. It's been a very challenging, and this is fourth time this season that we've had Weewaw closed off. Narrabri, Moree, you've seen in the news under significant amount of pressure through flooding. So this highlights the challenges that we've had this season in execution, in logistics, and you can go to the next slide, Neil. The cost, if you do the maths in our P&L, our processing and distribution costs on a per barrel basis have gone up 18% year on year. That reflects inflation. It's been a challenging year. We've passed on some of those in terms of those costs in terms of margin, And you'll see that we have been able to maintain our margins in certain areas, but in other areas they've come under pressure. But if you look at our overheads, our salaries and labour, we've actually had a year-on-year decrease on a per barrel basis. So we've been able to generate efficiencies, volume efficiencies that are flowing through. So it has been a challenging year. But next slide, Neil. I will hand over here to go into the numbers a little bit more detailed to our CFO, Sonya.
Thanks, John. Thanks, Neil. Yep, so we're on slide 10. So volume drivers, John's spoken about some of the numbers that we'll go through in these next few slides at a high level. But the volume drivers that you can see there, so, we've increased by over 100% across the board on this time last year. We're expecting to gin 1.2 million this season from a $5.6 million barrel crop. We're expecting to sell 370,000 tonne of seed this season, which is a record volume for us. However, due to, as John spoke about, in terms of that, the delay in the season and the volume that we were still ginning at half year, we'll be deferring some of that income into the second half of the year. Next slide, Neil, thanks. So earnings. So as John spoke about, we've generated an EBITDA of 20.9 million in the first half, which is an increase of 33% on the back of about 109% increase on volume. And as John spoke about earlier as well, we have managed to maintain our ginning margin despite the increase in costs, and that's predominantly due to the increased contribution from cottonseed. Also contributing to that number is our earnings from our joint ventures. They've doubled to $2.1 million. So next slide, so slide 12. So our balance sheet. So we've got a strong asset backing there with the increase in working capital, to support operations and predominantly around that cottonseed marketing. So our balance sheet, our core working capital, excluding debt, increased by 27.8 million, with increase in cottonseed inventory and receivables, net receivables. This was largely funded by debt, where our net debt increased by 26.1 million to 61.1 million. Our net assets have increased by 6.1 million, and that includes 4.8 million from unrealised cottonseed marketing contracts. Next slide. So cash flow and debt. So again, our cash flow is a reflection of the increased cottonseed marketing this year. So we do have renewed increased debt facilities with CBA in September of 21 last year of up to 79.5 million. And that's provided the working capital and given us the headroom to fund the increase in cottonseed inventory. Our underlying cash flow, if you exclude the cottonseed inventory for marketing, is strong at 20.9 million with 100% EBITDA cash conversion. And as noted, earlier on the slide, so most of the cottonseed inventory will be executed in the second half of this year, which will release that cash into earnings. We've also funded increase in CapEx to support the 4 PP projects. So next slide, Neil. So we've got that again, that strong underlying cash flow. We've maintained core debt, and that's considering the increase in the cottonseed inventory. So again, our underlying cash flow at 20.9 is a reflection of the ginning volume that's been delayed and the increase in cottonseed inventory. Our core debt of 31.3, excluding the cottonseed inventory, is in line with past years, given 3 years past below average volumes in the season. So Neil, I'll hand over to you for the strategy update.
You're on mute, Neil.
Yeah. Good afternoon or good morning, depending which state you're in. Just in terms of quickly wrap up on 4PP strategy, we announced this last year. It's a broad strategy whereby we're looking at 4 different planks The first plank is to create a leading cost position, increase our margin. We're doing that by investing in our gins to make them more efficient and get cost savings. We're looking at innovative solutions, different ways which we can interact with our growers with new products. And we're starting to roll out those products this year as well. The third plank is broaden our revenue. A very key issue, as John said beforehand, we are a diversified business and co-products are quite important in our portfolio. A lot of the focus we have is to expand complementary earnings that can add value to our ginning business. And lastly, and definitely not least, is our staff. Ginning is a very bespoke industry. There is a staff shortage in the industry, and we're spending a lot of our focus ensuring that we have a pipeline of good talent coming into the business to support our growth going forward. In terms of this year, we implemented two major strategies, two major projects, which have started delivering results for this year. The first was Namoi North. We upgraded the gin. That delivered cost savings and also enabled us to gin faster, to deliver a better service for our growers, particularly with the larger season. We're pleased that we completed it on time before the picking season in ginning and delivered results already in this first year. The other project we embarked upon was building a new cottonseed shed at Boggabri to handle more cottonseed. And storage is critical to our business. If you store cottonseed, you can capture value in that storage and also service our export and domestic customers. That shed came online towards the end of the season, and they'll be very valuable next year as well to service the domestic market. We are continuing the program of our 4PP program next year, and the two major projects we have embarked upon is the Tringy upgrade. That gin will be upgraded similar to what we've done with Namoi North, and we're also looking at more automation at that facility to reduce the headcount and operating costs and increase the ginning speed. We're also looking at different maintenance systems to improve our maintenance across the network. And at Boggabri, we are looking at a project to recover more moat. Moat is a byproduct from trash and cotton, and we're trying to recover more moat from the trash, which will reduce the amount of trash we generate, at the same time capture a product which can be on-sold into the market. The other major project is we're looking at is Northern Australia. We announced this in September, the deal with Kimberley Cotton Company. That is progressing. We expect to start procurement and construction soon, hopefully in November. And we're targeting an operation 2025 season. And at this stage, we're still on track for that. At the same time, we're looking at longer term projects in Northern Queensland. We are engaging with growers in Northern Queensland, and we're working with the local councils and the Queensland government to look at opportunities for new gin sites there. And this is to serve as our strategy here is diversify our footprint. We have a very good footprint at the moment in New South Wales and Southern Queensland, but moving into Northern Australia will just again diversify our network, create synergies, and give us a more diversified portfolio. Pass over to you, John.
Thanks, Neil. Outlook, two parts. Going to talk about the outlook for the remainder of the second half of the financial year 23, and then an outlook for the financial year 2024. For the remainder of this year, through to February next year, the focus for us, we will gin 1.2 million bales or thereabouts. We, as you know, in the results at 31 August, we gin 950,000 odd bales. We will gin 1.2 million bales, and our market share will, for the Australian cotton production, will be around that 21%, which you can see on that chart on the left-hand side where we've increased from the prior year. The chart on the right-hand side shows our prediction of earnings for the remainder of the year. You can see here, traditionally, the seasonal element of our business means that the bulk of revenue and earnings from ginning comes in the first half, and you then go through a process of generally a negative second half when you're executing the remainder of seed. For FY23, you can see that on the far right-hand side of that right-hand chart, we're forecasting basically a break-even earnings for the second half of the year, and we maintain our full year EBITDA outlook of $19 to $21 million. The current conditions, weather, flooding, will delay logistics. There's no doubt about that. Will cause delays. However, we at this point in time, we maintain that EBITDA outlook of $19 to $21 million for FY23. For FY24, Neil, if you can go here, you've seen this chart on the right-hand side a number of times. There's certainly no issue in terms of the commentaries generally around whether there's sufficient water. There's no doubt that there's sufficient water around currently, but this flooding you're seeing right now in New South Wales, in the heart of the cotton growing areas, will definitely impact planting and yields. So it's too early to call what the impact of that will be. We're still in a crisis mode rather than a recovery mode. We've still got more water planned coming in there, more rain forecast. So it's too early to tell what the impact will be. However, at this point, we're maintaining our range that we've announced previously of 1.1 to 1.3 million bales for the 23 season. However, again, I say we're watching the weather as closely as everybody else, and we'll be looking at that regularly over the coming period. I'll stop there and open it up for questions. Sarah Jane, have you got that?
There's no questions coming through, but if anyone, yes, we have one. Apologies.
Belinda.
Can you see them, John, or would you like me to read it out?
I can't see the question, but I can see it's Belinda. More. I'm presuming that it's Belinda.
No, Andrew Mack. So could you please help explain the degree to which Namoi's key grower regions have been affected by the current flooding, and in particular, what is the latest possible date for growers to plant the coming summer cotton crop and still achieve a reasonable crop yield?
Lot of difficulties in definitions of reasonable, etc. But let me try and break down the question. And I'm speaking generally here. It's going to vary, specifically in terms of regions, but in general, planting starting from the far south of New South Wales, anything from the beginning of November. You're getting planting now up until the end of October, early November. Then you'll start to have reductions in yields. And then as you move further north, all the way out to Queensland, planting could go into December. But basically, you're going to have reductions of yield the later you plant. But also, obviously, flooding is a different event that you could maybe not have that crop take at all. The planting not be effective at all. So. From a timing perspective, between now and December is the key area for key timing for planting. I think the question was, what's the impact in our area? Clearly, our area is heavily impacted in the Moree, Narrabri, even down south through New South Wales. So we are very much impacted by the current flooding. I think Belinda had her hand up. Belinda, did you have a question?
Oh, John, can you hear me?
Yes, can.
Oh, thank you. Sorry, look, I've probably sent a few questions through. I've just typed them up. Yeah, look, on probably one for Sonya, first of all, how should we think about operating cash flow for the full year? Will some of that actually even fall into the 24 year?
At the moment, the operating cash flow that we're looking at will fall into the second half of this year. And obviously, just execution of that cottonseed blender will play into how it will pan out towards the end of the financial year.
Okay. And then can I just check, is there any 4PP EBITDA in this result, or is it more coming through next year and beyond?
Predominantly next year and beyond, but there are some impacts, Neil.
Yeah, so the Rye North definitely generated a benefit this year. It's fair to say, in terms of context, it developed substantial, probably a 10% plus benefit in cost and operation against what it could have been without it. Unfortunately, the wet moisture cotton reduced the speed. So we actually managed to achieve a very good performance with high moisture cotton, but we didn't get the full benefit compared to the normal season, but we got a substantial benefit compared to what we achieved. In fact, to some extent, we wouldn't have achieved the great outcome this year without that new machinery with the high moisture cotton coming in.
Okay, no, that's great.
Just going to the next question from Steve Chapman. I'll just answer that. Steve Chapman has asked a question, wishing your people and farmers well. Thank you. It is tough. My question is, have ABARE updated 23 estimates for your valleys? Last estimate September. Also, any new estimates from Cotton Compass? In answer to the question, ABARE has not reissued their forecast. They tend to do that every quarter. In terms of Cotton Compass, yes, I can report yesterday, Cotton Compass issued another report after our release of results.
Oh, right.
Their forecast now is 5.25, so still consistent with the ABARE's forecast. But they are stating, as John just stated, we are in the planting time, so we won't know for a few more weeks, a month before what actually will be the outcome. But at this stage, Cotton Compass is 5.25 million bales for Australia.
We have another question, sorry, from Belinda. Must have cut her off a bit early, sorry. How many future above average seasons will you get from these high dam levels?
You want us to quote the exact number, do you, Belinda? I think the one thing from this current flooding event is that this doesn't take away from the very strong longer term outlook for the growing conditions and for the industry in general. So this is a challenge. This current flooding is certainly a challenge, but the outlook is just being deferred slightly in terms of the good conditions that we're looking at. So I don't think we haven't changed our view at this stage in that two seasons we think is a reasonable outlook, and it could be a lot longer than that in terms of the water availability and supporting above average volumes.
Yeah, and just on that, Cotton Compass has actually said potentially up to 25 season. There's the third season out, potentially the amount of water's there.
If there was no more questions, SJ, was there any others?
No more coming through as yet.
Thanks, everyone. We'll look forward to the next catch up. Thank you.
Thanks.
Thank you.